morning and welcome to Grain TV for July 12, 2012. To my left is Cody Bills and I'm Brock and Cody. Yesterday we saw a slight sell-off after the USDA reports, but today we're once again positive in Chicago. Let's turn over to Fire Tip for the live quotes. Old crop corn is up 19.5 cents. New crop is up 21.25. New crop beans up 7 cents. Wheat in Chicago up 18. Kansas City wheat up 13.5 cents this morning. Cody, today is Thursday, so that gives us the USDA's latest installment of the export sales report. Are we seeing any changes as far as corn is concerned?
Well, actually, we have seen changes. Last week was the worst export sales week reported for this year, and this week we had a pickup here. We met analyst expectations, came in around 172,000 metric tons in the old crop. Beans really is an outstanding performer this week again, coming in at 332,000 metric tons in the old crop and 427,000 metric tons in the new crop. So beans, I think, is once again continuing to show strength in export sales. I think they're going to beat even the revised USDA forecast. And not only that, but their inspections are now ahead of pace. So that's really good to see. Take a look at wheat. They were 311,000 metric tons in the old crop. That came in shy of analyst expectations. In terms of where corn needs to be right now to meet USDA expectations, we're 21 million bushels behind forecast. And you can see that as a result of that bar right there, we continue to come in below the yellow line, and the yellow line is what we expect to see in taking into account seasonality, what we would expect to see to meet USDA expectations. So once again, coming in well below the yellow line, and that's just disappointing. I think we're going to continue to fall behind just because prices have rallied so strongly and so sharply in the recent weeks. In terms of beans, this is a completely different story. Like we've talked about, we're 52 million bushels ahead of pace. Just another big week for beans. We came in kind of just above that yellow line, which is where we need to be. So very good for beans. I would expect exports to continue to outpace, and the USDA to once again have to revise them in next month's report. But that's a ways down the line. We won't make any claims just yet. Now that is the export demand, Brock. And what have we seen for demand destruction over in the ethanol complex?
We have seen ethanol production actually slow down pretty substantially over the last few weeks. If you take a look at this chart here, you can see that production for this week, we were down 252,000 barrels for this week alone. That is 4.2% below where we were last week in production. And compared to last year, we were actually 5.85% below where we were at this time last year. That's kind of concerning considering that the USDA actually did revise the ethanol usage of corn down by 100 million bushels in the report yesterday. So that's something we're going to have to pay attention to going forward. As far as stocks are concerned for ethanol, we see that also being lowered by 761,000 barrels last week, which is 3.75% below where we were last week. But we're still ahead of where we were last year by 3.72%. So, there are some concerning things going on in ethanol. I've heard that a couple of ethanol plants have shut down in Nebraska. One is shut down in Indiana. So they're sitting idle right now. So production is going to be a big concern moving forward for ethanol.
Yeah, so these real high corn prices make it very difficult for them to turn a buck. And sometimes it's easier and more profitable just to turn around and sell the high-priced corn inventory that they have, as opposed to trying to convert it into ethanol.
Yeah, it's definitely a good thought, Cody.
And if you have any questions, give us a call at 877-472-4607. Follow us on Twitter, follow us on Facebook. We'll see you tomorrow for the Friday weekly wrap-up.